Angela Lee Butch,
Yes, here.
Keith Johnson, Keith, Matt Duda had to go to another meeting.
I'm here.
Donna is here.
Yes.
Clyde Stansberry.
Here.
Hi, Clyde.
Hey, Nancy.
Vicki.
Here.
Carol Broussard.
Yes.
Mia Lemaire. Katie Landry.
I'm here. Did you hear that Matt's there?
Oh, no, Matt is here. Okay, great,
Yeah.
thanks.
We kept trying to tell you, but he got cut off.
Okay. And he got his answer to his question from Brooke. She sent it in to him in an email. Burnell is there.
Here.
Mary Jane Lewis. Shannon Crumlish.
I'm here. Can you hear me? I'm here.
Okay. CG Hollis. CG. Tommy Angel. Justin Santani. Hannah. Trish.
I am here. Yes, ma'am.
Anybody I left out?
Yes, ma'am. John Muto.
Hi, John Luta. It's nice to meet you.
Yes, ma'am. You too, Miss Mary.
And welcome to our meeting. So Trish, we have is absent. They may call in later. It's Angela Lee, Keith Johnson. Keith emailed me. I know he planned to come. Mia Lemaire, Mary Jane Lewis, and C.G. Hollis. I'll email you those names.
Okay, I was writing them. Thank you.
Okay. Just for future reference, is there anybody who does not have access to Zoom? Should we need to do a Zoom meeting in the future? Everybody has access to Zoom?
Yes, yes.
Okay, terrific. So we just need to ask the five that are absent. That's great to know. Hopefully we'll be back meeting at the boardroom, but just in case we aren't. I'll call the meeting to order. For our 3 new members, if you have any questions or feel overwhelmed with information, you're not alone. It's a lot to take in, and it takes a lot of meetings before it all kind of makes sense, but Mr. Fontaine is a great teacher. Can I have a motion to approve the agenda as distributed?
I'll make the motion. It's Clyde.
Okay, Clyde, is there a second?
A second.
Who was the second?
Deborah.
Okay, thank you, Deborah. All those in favor? Say aye.
Aye.
Aye. Opposed? Okay, a motion to approve the minutes is distributed, Trish?
I so moved for now.
Burnell, thank you. Is there a second?
I second it. Let's move on.
Butch. You got that, Trish?
Yes, ma'am. I have it.
Okay. All those in favor? Say aye.
Aye.
Aye. Anyone opposed? All right, next thing on the agenda is our quarterly report from Hub International. Their representative is Lynn Fontaine, who has been our hero for the last several years. Some of you may have printed out what he sent. Others of you are going to use your iPad or computer or whatever. But if you just follow along, he will explain the document that was emailed to you. And if we do have to have another distance meeting, when someone asked whether or not document printed and sent to them because they wanted it in print, so they would keep it. So I might forget that, but just to let you know. All right, Mr. Fontaine.
All righty. Well,
Do you
thank
want
you,
all of us to
everybody.
mute?
What's that?
Did you want all of us to mute during your presentation?
That would probably be better. That'll cut down on any kind of echoing or improve reception for everybody. So obviously, if anybody has a question, feel free to stop me. I'm going to stop every so many pages and ask if anybody has any questions. So keep that in mind, and I will. I've done this a few times before, so we've getting kind of practiced at it. I've got Brooke Brune, my left and right hand, on the line with me as well, and we'll cover a couple of updates for you on some of the saving strategies that we've implemented recently or are in the process of implementing. So with all of that being said, I can't thank you enough for your patience and allowing us to do this over the phone. And I look forward to seeing everybody again. I miss you guys. So we'll start on page 1, and this is obviously the data from January 1st, 2020 through June. So if we're looking at participation up at the top, you'll notice that we had a slight uptick in participation. And in the next few pages, we'll give you several statistics on that. Our medical claims through the first 6 months are at $15,411,000. Prescription drugs, $9,637,000 for a total claims of $25,048,187. And you can easily see that total claims are actually down when we're looking at a full year in 2019 at $52 million. Plan reimbursements at $1,313,000. That is one of the major reasons that we see a slight increase a slight increase in our deficit here because we have not gotten as much back on plan reimbursements. Doesn't mean that there's a problem. I can tell you, and you might want to jot this down if you can, in July, we did receive our second quarterly rebate for our prescription drugs to the tune of $1,145,513. So the only reason the plan reimbursement number is low is 2 reasons. Number 1, we hadn't gotten the second quarterly rebate in on our prescription drugs. And number 2, we're in the beginning of the year and none of our high cost claimants have gone over our reinsurance threshold, which is at $500,000. For those of you who have just joined the committee, obviously a welcome to you. But just to set the table on this reporting and what we do here, our plan is not a plan that we go to an insurance carrier and purchase, i.e. a Blue Cross or any of the other carriers. We deal with Blue Cross in that they are administrator of our claims and plan, and they process claims, provide us with a provider network and other administrative duties, but the claims are paid predominantly by the system, and also with your contributions that you make as either an active or retired member into the plan. The plan also, we utilize reinsurance for financial protection in the event that we have a very large claim, and that deductible is set at $500,000. So when you look at the previous year in plan reimbursements of $5,280,000, you'll notice down at the bottom, the first footnote, that includes specific reinsurance reimbursements, prescription drug rebates and credits, and any type of subrogation payments. So we haven't had much in the area there, but that number is going to more than double once we look at the July data, because we got that $1,145,000 in for our pharmacy rebates. And remember, those committee members who've been on for a while, we've been able to increase our rebates substantially in the last few years here. Retiree drug subsidies at the 653, so our net claims paid figure is at $23,081,000. Fixed cost is the cost that we pay to Blue Cross and our reinsurer to run the plan, our retention, at $2,035,439. Then we have our Humana retiree premium at $299,444. So if we take our net claims plus our fixed costs plus the Humana, we're at a total plan cost of $25,416,698. The real measure to this, because we're comparing a 6-month period to a full year, we look at our total cost from a per employee per month basis, because this takes into account the increase, decrease in the number of members or number of actives and retirees in the plan. So right now the plan cost is $731 per employee per month, which represents a 0.3% decrease from the prior year. Then we look at our funding, how much we're receiving on active employee contributions, retiree contributions, and then of course the majority coming from the board's share for the active and retiree contributions, and then COBRA. So our funding coming in at $25,022,399 provides us with a net employer cost of a little under $18 million at $17,911,000, which is slightly over our budget right now, giving us a slight deficit of $394,299. I will tell you that as of the end of July, because we've seen most of the claims thus far, we've seen the prescription drug number, and we know what we got back in that $1,145,000 rebate. At the end of July, we will no longer be in a deficit position. We'll be in a surplus position to the tune of about $500,000. But we're watching this very close, and I'll share a lot of those reasons with you along the way through the reporting here. In measuring and looking at that 731 number, I count a projection for the end of July, and it's bringing that number down to about $713 per employee per month for the 7-month period, which represents about a 2.7% decrease in our planned cost. Right along with that, going to page 2. Page 2 is the same information on page 1, but it breaks all of the different components down on a per employee per month basis. So you see our participation has increased slightly at 1.2%. Most of this is listed at the bottom in these bullets. Our medical claims have decreased 6.1, purely due to this lower utilization. And then, of course, in the first half of the year, we've got deductibles and co-insurance that are accumulating. Prescription drugs have come down 3%. That's due to the negotiations that we do annually, and a little bit of lower utilization and higher generic utilization. All good things there. So total plan cost down that 0.3%. Total plan cost net of employee contributions down some 0.6%. On page 3, same information but broke down on a monthly basis, and as you can see, we were having we had a rough month in March, and we had a rough month in June. June, we did have a couple of very high-cost claimants that spiked into the plan, preemie baby and a couple of accidents, none of which are of an ongoing nature. And I'm pleased to tell you that the last couple of claims runs have been pretty favorable. But of course, you know, we also have to consider that during COVID, some of the claims, weeks in our claims have been down because of the stay-at-home order. Some of that is creeping, experience is creeping into the plan right now, which is actually favorable because some of it is going to have some catch-up to it, but most of it doesn't. If you miss a periodic visit or some type of healthcare checkup, you're not going to have two when you are going down the line there. So that's the logic behind some of that. On page 5, well, before we go on, any questions on those first couple of pages? Okay. Stop me anytime because the next couple of pages are going to have to do with demographics, and there's some discussion around there.
Man, this is Nancy. I have a question on page 2. You said total plan cost net of employee contribution has increased or decreased 0.6%. I thought you'd said decrease, but it says increase. The bullets at the bottom of page 2.
I'm sorry, I had you on mute. Okay, I'll answer the question again. It is increased by 0.6%.
Okay.
Okay, and I'll give you the reason why. If you go to page 2 and you see total funding, do you see the $720 figure?
Yes.
Okay, that is the per employee per month funding. So if our cost is $731, our funding is $720, that gives us an $11 per employee per month deficit. Notice that the funding number in 2019 was $725. Prior year, $738. Prior year, $737. We know we have not changed our rates, so why are we having lower funding? The reason is that's an average, and we have more single participation into the plan than family, and it's brought that average down. So really we're funding less into the plan, even though we have more employees, which makes for a reason for that increased number of 0.6% for the employee contributions. Is that everybody understanding on that?
Yes, sir.
Perfect. So bringing you to page 5, enrollment has increased 1.2%. Employee, and just right in line with what we just discussed, you'll notice the bottom bullet on page 5, employee only participation increased 1.7, employee with dependent participation increased 0.5% or 0.5%. That's favorable because if we were to see that our dependent participation was increasing faster than our employee participation, that means we're taking on many more bodies. Participation is always going to be reflective of the number of employees and retirees, whereas membership is going to be reflective of how many bodies actually covered into the plan. So right now we're not seeing that membership is greatly outpacing our participation, and it's very important because several other systems that we represent, when we see that the membership is outpacing participation, we see that covered spouses will actually have a much higher percentage share of claims than do the active or retiree population. So it's something that we're watching, And right now, with COVID, with $41 a barrel oil, we're watching this even more closely than ever because as some of the service companies in our area might well be downsizing from an employee standpoint, with any type of layoffs, we want to make certain that we're monitoring it, not taking on additional risk, with any type of high-cost claimants. Naturally, we might have some transfer of risk to the plan, but hopefully it's spread out with both young and old demographically there. So we watch that very closely. Enrollment by plan on page 6 deserves some conversation as well, because if you'll notice, the enhanced plan in orange has gone from 14.8 in 2018 to 15.2. And that sends a message. We have not had a premium change, nor have we had any type of significant benefit change. We've had some tweaks in our benefits, but nothing that I would call significant. And we've had no premium change. And when you start to see folks migrating back to your enhanced plan, that tells you that your population and your membership is pretty comfortable with the premium structure, because you're having people that are moving up in your benefits. At the same time, we've had good migration to our Blue Saver plan. We've gone from 18 to 20.8%, which is a good thing. So we see some folks migrating from basic to Blue Saver, and we see folks migrating from basic to enhanced. I'd like to see more migration to from enhanced to basic, and from both plans to Blue Saver, which would obviously be beneficial to us from a cost standpoint. So one of the things that we discussed with John and Trish is we're gonna double down on some communication with regard to education on plan choice. On page 7, when we talk about membership, again, your participation increased 1.2, and that's employees and retirees. Membership number of bodies in the plan at 1.1. So participation still taking the lead there, not being outpaced. All of this really comes to a head on page 8, because we want to make certain that this number doesn't get any higher on us. Right now, our spousal claims are about 9.6% higher than employee claims, which is not a high statistic. I have several plans where spousal claims are as much as 50% higher than active employee or retiree. They're 3.7 higher on a 3-year basis, so it has not become a significant problem, but it's something, especially with our current situation, that needs close monitoring. Page 9, just showing you graphically the decreased medical claims at 6.1%, lower utilization, which is a part of that being COVID, not all of it, but also accumulating towards deductible and out of pocket. Prescription drug decrease on page 10 of 3%, slightly overall utilization, most of it coming from the increased discounts and rebates we were able to negotiate, but also higher generic utilization, which I'm going to be real pleased to show you in coming pages here. You guys have one of the highest generic utilization percentages for a school system that I report on. So that's good news and a compliment to the department on getting that education out. We've implemented saving strategies here over over the years that have really worked for us and not provided any type of real disruption to the plan. Our prescription drug rebates are over $5 million now, and when we first took your plan on, they were minuscule. We probably quadrupled that since we've been able to bring the prescription drugs, carve that out, and go to RX benefits there. From a total claims perspective on page 11, down 5%. You know, we also have on 7/1 here, we implemented the plan changes with regard to a higher co-payment on our prescription drug brand name by $5 or out of pocket on the enhanced. And then, of course, we're implementing the AgWeb plan for 1/1, and Brooke will give you a little update on that further in the presentation. So these are all saving strategies that are being implemented for 7/1 or currently going under the implementation stage. We always talk about need for rate increase if we see that the plan's cost was really ramping up. Obviously, we're not going to be at a whole rate steady permanently, but we've done a good job of not having to have a rate increase since 2017, and we would certainly want to use additional saving strategies before we recommended any type of increase. But of course, when we're talking about funding versus claims, we know that July has turned us around into a surplus, but something that we're monitoring very closely. And I am in talks with the pharmacy benefit manager to look at some additional saving strategies with regard to some of the high-cost medications that I'll be presenting to you at our next scheduled meeting. Any questions? All right, we're on page 12 now, and you've seen some of this data already in the presentation, but I really want to point out the bottom 3 bullets here. The enhanced plan, and remember, we increased our participation into the enhanced plan this year slightly. Enhanced plan now has 15.2% of the participation, and it represents 20.3% of the claims, so it's not paying for itself. Basic plan has the majority of your participation at 64%, but it's right under 70% of your claims. Once again, it's not paying for itself. The Blue Saver has gotten to 20.8% of your participation, but it only represents 10% of your claims. Therefore, the Blue Saver is supplementing your basic and enhanced plans. We've all known this for quite some time, but it's getting to be more prevalent with the statistics from each and every quarter here. So we definitely want to provide additional education on that Blue Saver plan because obviously it's very cost effective.
Lynn, this is Clyde. It looks like Blue Saver makes them think twice before they go over to the doctor for a sniffle or a cold. Yeah, but that's because they're paying for it.
That's correct. Blue Saver, not only is it a higher deductible, so naturally it's going to have a lower cost because the member, should they have any kind of significant claim, is going to come out of pocket a little more. At the same time, it's priced much better to the member, but what it does provide is more transparency of what the cost of health care is, because as you're reaching that higher deductible and you don't have those co-pays to rely on, you actually see what the cost of that medication is. You see what the cost of that diagnostic test are. So it makes you become a better shopper. We have talked about transparency and shopping and comparing prices. Folks that for those of you who are new to the committee, keep in mind that when you're in network, which we're going to see in further reporting, 98, 99% of all of your claims are in network. So Blue Cross provides plenty of choice for us to use network providers. But to go a step further, just because you're in Blue Cross's network doesn't mean that everybody has the same price, let's say, for an MRI. We've seen examples where somebody can drive 5-10 minutes down the road and cut the cost of an MRI in half. And so don't think that just because you're in a network that all providers charge the same price. Blue Cross contracts with each employer on an individual basis. So what happens with the Blue Saver is there's a little bit of consumerism in there, which helps to drive the cost down.
Lynn, this is Nancy. Just for the folks that are new, we have 3 different types of plans, but they suit different types of people. We have employees who've had significant health problems that are better suited to one plan than to another. So what we're doing is giving options to our employees in consideration. Some have families on their plans, some are single. So we're giving options to our employees by having those 3 different types of plans. There's a reason we don't all just have Blue Saver, for example. I'm just curious what the participation in Blue Saver was last year.
That was covered on a previous page, and I'll tell you to go to page.
I just saw it, Lynn, my mistake. It was 19.7.
Yep.
And participation in 23.8 membership.
Mm-hmm.
So we went down from 23.8 to 20.8 in participation.
No, if you look at page 6, Blue Saver, okay, went from 19.7% of the participation of the plan to 20.8. If you look at the numbers down at the bottom, we went from 538 employees in the Blue Saver in 2019 to 562 in 2020.
Okay, thanks very much.
Got it. Going back to, we're at page 14 now, which breaks down the claims by type of service. So if in fact COVID would have been a big factor in bringing the cost of the plan down, remember this, and I've told you guys this time after time, 85 to 90% of the cost of the plan is driven by 10 to 15% of your membership. So in any given year, the ebb and flow of cost, either up or down, has a big factor or tied to the number and severity of high cost claims. One of the things that we're battling this year is if you look at your inpatient hospital utilization, it increased 8.4% during a time where you would think it would have gone down. Why? High cost claimants. So if we were to be in the absence of some of the high cost claimants, we would have seen a pretty significant drop because the utilization is actually down. That's the COVID part, but the high cost claimants or inpatient hospital utilization is up. Not because of COVID, predominantly, you'll see in the next couple of slides, predominantly musculoskeletal. We had some high cost injuries, heart, and then of course respiratory and perinatal. And that's covered on the next page actually. Before we get there, I will mention that outpatient went down 8.5%, professional, which is going to be your doctors and any type of diagnostic work there, occupational therapy, all of that kind of thing, covered under the plan, actually down in those areas. So when we look at page 15 and musculoskeletal being number one, and injury and poisoning, of course, that's injury, and circulatory, respiratory, perinatal, all of those different categories, you'll see that the numbers are actually up on a few, down on a few. I will tell you, the Regenics that we implemented for 7-1 should have a very positive impact, because if you look back, musculoskeletal has been number one for the last 3 years running.
Lynn, I have a question
So
for
if
Regenics.
you are new to the program, Regenics is something that we implemented on 7-1, and it's an alternative to orthopedic surgery that has a lot of benefit to it, from not having to undergo the surgery, not having to be put to sleep, not having to be subject to pain medication, time off, all of those types of things, and at the same time has a very significant reduced cost as compared to orthopedic surgery. Yes, who had a question?
Lynn, I had a question, Regenics. We received a very nice letter with the logo on it, kind of talking about it and encouraging it, and I read through it and started doing a little research on it, and it's not FDA approved, which I guess concerned me a little bit. And from the reviews, it seems to be a kind of it works or it doesn't work kind of thing. It had people that raved about it and people who said it didn't work at all. Are we tracking that particular product because we're promoting it? I mean, I'm really excited about this. I really want it to work, but are we tracking that separately to make sure that we are truly saving money using this and that it's truly working on our employees?
Absolutely. We're going to track, we're going to report on it, and the statistics are that it does work for about 70% of the folks that try it. It's not going to be a silver bullet or a replacement to orthopedic surgery at all, but I can tell you, if it does work, I would much rather walk out of a facility with a Band-Aid than a wheelchair, prescription, and all of those types of things.
Absolutely, and I applaud your leadership on this. I would just like to hear from some of the people that are using it. I mean, I haven't heard anybody that's using it, still early, but I'd really like to see some good results from that, hear some success stories, maybe, so we could promote it a bit more, because I think this is, you're correct, this is key, is it really saving the plan some money?
Absolutely.
Do we know why it's not FDA approved?
Ma'am?
I'm sorry. Do we know why it's not FDA approved? I don't remember being told that when we voted on this.
No, the only reason it's not FDA approved is because of the newness of it, and it's in plans all over the country. It's not being FDA approved does not present a big risk to us because it's a non-invasive procedure. It doesn't provide any harm to a member.
Okay.
Thank you, Lynn.
Well, so now we are on page 16, and I will tell you that from past reporting, we all know that we have had a high degree of cancer in the plan. And when we talk about that on an inpatient basis, you see neoplasm the last couple of years has been certainly made our top 10 with big numbers. And of course, it continues to be there. The factors influencing health, making number one, tells us that many of these cancer treatments are on their tail end, because factors influencing health includes the maintenance chemo that is at the tail of a cancer treatment regimen. That number is significantly up, and that could bode for some of our cancer claims coming to end of treatment there, or hopefully remission. Top facilities on page 17, we've switched, and this is just because of some high-cost claimants. Lafayette General is usually our number one. Lourdes is number one right now, in the general number two. Nothing really to be of any concern on that. That brings us to page 18, and so happy to show you the 88% generic utilization here. That's high for a school system, and doing quite well in that regard. Now, when we turn the page, you're going to be a little discouraged, and I'll explain this even further, especially for those of you who are new to the committee. So we are using generic medications 88% of the time. When you go to page 19, that 88% only represents 13% of the money. So if I flip the coin, brand name medications are only 12% of your total scripts, but driving 87% of the cost. So it doesn't take us much to figure out that the cost between brand and generic is phenomenally huge, and every percentage point that we pick up there obviously helps. On page 20, you'll see that we've creeped down as far as utilization goes. In 2017, we peaked at 3.1 prescriptions per employee per month, or 1.7 per member per month, and that's tracked down to 2.6 and 1.5, which is positive. That helps with the decrease in our prescription drug costs. And it's so rare to tell anybody that their prescription drug costs are decreasing. Most cases are increasing, and increasing on a double-digit basis. If we were increasing on a double-digit basis, we would be in one heck of a bind from a funding standpoint, because prescription drugs are now over 30% of the cost of the plan, whereas years ago, some 5-6 years ago, they only amounted to maybe 15% of the cost of the plan. While medical has gone down a bit or stayed flat, prescriptions have gone up. And obviously there's maintenance medications that are keeping us healthy, and that's part of it. But the main reason for the spike in the last couple of years, 5 years or so, are the introduction of all of these new specialty medications that have hit the market that I'll cover in the next couple of pages. On page 21, I love this report in that I don't see any of the things that are questionable as far as abuse goes. You know, hydrocodone's not on our top 10 anymore. We've had discussion about that. Many of my systems and large employers have heavy utilization of ADHD medications or mental and emotional and nervous medications, things like that. These are all meds for high blood pressure, thyroid, cholesterol, and the things that you want them to be, those maintenance medications that help to keep us healthy and out of the hospital. On the next page, these are your top 10 drugs by dollar amount. I'm going to point you to the first bullet at the bottom. These 10 medications represent only 2.3% of your total prescriptions and almost a third of the total claim spent. That's a huge statistic. And what you're seeing here are anti-inflammatories, cancer medications, and diabetes medications, and no different from what I see in many of the large cases. Humira is probably number one on 9 out of 10 reports that I cover. A lot of these medications, they treat 3 different areas, the anti-inflammatories do. Rheumatoid arthritis, psoriasis, plaque psoriasis, moderate to severe plaque psoriasis, and then Crohn's disease. And Humira, Stelara, the Dupixent, all are in that category. You also are seeing higher use of diabetes medications, and people are going up the continuum from drugs like metformin, which is generic, to drugs like Trulicity, which are more expensive, but they also provide treatment for those who might have comorbidity with a heart disease or something like that. Same thing with the Januvia at the bottom there. So even with these high-cost medications increasing 10%, we're still able to keep prescription drugs at a decreased cost basis because we're getting higher rebates on these medications. Any questions on the prescription drugs? Okay. Page 23, you see that our PPO savings, and if you ask a couple of questions, well, why have we been with Blue Cross all these years? Well, one of the reasons is that they have the largest market share, which allows them to negotiate the deepest discounts as compared to some of the carriers. They're Blue, United Healthcare, Cigna, Aetna. Blue certainly having an advantage when it comes to PPO savings here. And at the same time, if you look at page 24, not only do we have deep discounts, we have a network that provides us plenty of choice, whereby 98.1% of all claims are paid in network. So very little claims going outside of the network. Then on page 25, and this is especially a good page for those of you who are new to the plan. A lot of times you'll hear folks say, why are you self-funded? Why don't you just go to the insurance carrier and let them take the risk? One of the reasons is that it would be more expensive from an administrative standpoint, because if you combine what we spend for reinsurance and administration, combined it is 8.1% of our total plan cost. So we're basically getting 92 cents on a dollar dedicated towards claims. Whereas if we were fully insured, that could be as much as 15 to 20 cents on a dollar, which would inflate our costs substantially. And of course also we have flexibility and control of our plan and better reporting, and can respond much better and much more flexibility under a partially self-funded plan. So I will tell you that 8.1% is extremely competitive to be running your plan at that little cost. That's better than the statistics of Medicare, Medicaid, or many, many, many private plans. Contribution analysis, we've pretty much covered this, and once again, when you look at the Lafayette cost and employee cost, and you see that employee cost going down, that funding is going down because we've got more singles than families. It's an average. There's been no rate change in the plan since 2017. Then finally on page 27, and this is basically reiterates what I was telling you before, if you look at some of these bullets at the bottom, the second to last one shows that 9.4% of your membership is responsible for 85% of your claims. So a lot of people think and say, oh, with COVID going on, nobody's going to the hospital. Well, You're still going to have to get that chemotherapy. You're still going to be delivering a baby or having that significant orthopedic surgery and those types of things. So you'll notice that claims over 100,000, and this is a measure of the same time period. First 6 months of 2019, we had 12 people over 100,000 at $1,821,000. This year, 21 people at $4,025,000. Difference being 2.2 million, and we still are having a decrease in planned costs. So one side, the lower numbers on 0 to 500 and all the way up to 20,000 have certainly helped to offset some of this. Also, lower claimants in that $50,000 to $100,000 area have offset some of that. I will tell you too, just like in other years, the second half of the year, one component of the plan, now that folks might have reached a deductible or out of pocket, that'll increase plan costs. At the same time, if a high cost claimant reaches that $500,000 deductible, that is no longer charged to the plan, so that decreases costs. So as we go through the year, you're going to see that plan reimbursement category creep up. With everything being in such a state of flux right now, we're going to be monitoring this not monthly, but actually I look at your claims every week. I'm pleased to tell you the last couple of weeks have been very favorable. And just keep a tight monitor on this. And at our next meeting, as I told you earlier, we're going to be looking at additional saving strategies so we can constantly implement things that will preclude us from having to increase that funding, which means a rate increase. And then, of course, the last page, for those of you who are new, we always give you a recap if you ever want to go back to this reporting and kind of look over it as a summary, and basically it highlights all of the different reports and talking points from the reporting. And that's the report. I told you Brooke would give you a brief update on the AgWIP program. If you remember, we implemented those small plan changes in Regenix for 7-1. We've had over 70 people contact Regenix, so it is getting some traction. And I can't wait to report some good success there. At the same time, the AgWIP program probably has as much or larger savings potential. The savings potential for the 2021 plan year is projected at or around $2.5 million, which is a greater number than what we originally had projected on that, because it captures the full year. It will ramp up as the savings will be minimal in the beginning of the year, and it just ramps up as the weeks and months go on, but the projected savings are at $2.5 million. If you remember from page 1, every month we get a subsidy from the government for our Part D drugs for our retirees. This AgWIP program basically takes that and makes improvements on it by making a larger number of these drugs available and increasing that subsidy. So we're not, that $2.5 million savings figure I just shared with you is in addition or over and above what we currently are getting on the retiree drug subsidy. And Brooke, I don't want to steal all your thunder. If you want to kind of share with us where we are in that implementation stage and give us a few words on that. But maybe before we do that, are there any further questions on any of the reporting?
Thank you very much, Lynn, and thanks to everybody in the school district, because I think our generic use are in this era to not have a premium increase in 3 years, I think is just extraordinary, and it speaks volumes of everybody who's worked so hard on this insurance plan. So thank you very much.
You're welcome. We are also, with the request in the event that we need to do another meeting either by phone or virtual, we'll make sure that we get these addresses and maybe get the report out in writing.
That'd be great.
Hard copy like you had spoken to. Brooke, you have anything to share on the AgWorks program?
Yeah, I mean, hey guys, Lynn, you covered it really well. We're looking at huge savings on this program. Trish and I have been talking pretty much about twice a day. There's a lot of heavy lifting going on as far as implementation goes. From an administrative perspective, we're working on member education material, welcome material. We're looking at draft ID cards, establishing the eligibility file and connection between Orix Benefits, Blue Cross, and Silver Script, which is the name of the program for the EGWIP. It's going to be administered through CVS Health. So we're getting the financial processes set up, and we're building those plans to be able to start working and mailing out the member education material. So I would say probably in the next month or two, I'm thinking towards the end of September is when the Medicare retirees are going to start receiving welcome material, announcing the change, and further material will come as we get closer to January. But we are working all of the background work right now to set the table for a successful implementation for January 1st. So we're working really hard, but it's going to be all worth it for that $2.5 million in savings.
And there's no reduction in benefits or types of drugs people are used to getting. They're not going to be forced to take something that's different than what they've taken before.
Right. So the way that I'm sorry, go ahead, Lynn.
Here, the Silver Scripts program is matching up the formulary to one of their most lenient ones, and there'll be very, very low disruption and no change in benefits. So there's really nothing from a membership standpoint change-wise. I will tell you, though, kudos to Trish and Brooke on this. I'm watching how many hours Brooke stays on the phone in implementation on a weekly basis. Probably a good 5, 6, and sometimes Trish maybe even 10 hours a week devoted to this implementation. So these two ladies have put a ton of work in on this, and certainly $2.5 million is a large amount of money, but this is an implementation process that's going, that'll probably take a good 6 months, and I can't thank them enough for their hard work in getting this implemented.
Any questions for Lynn or Brooke, or should we move on in the agenda? Okay, thank you very much. Before we go to the next item on the agenda, I think Mia joined us. Is that right? Yeah, Mia here. Okay, thank you. Okay, and Mary Jane, CG, Keith, and Angela. And I think Hannah joined us as well. Yes, Hannah is here. Okay, thank you, Hannah. Anybody else?
I did want to question about the email, the HSA changes.
Okay, that's a question for Brooke. I think she responded to your email.
Yes.
Okay.
And Brooke, I was really glad to see those changes happen. And I guess it caught me unaware of being on the committee that I didn't even know that had happened. So what I'd like to see is some effort to educate the 20% of the people that are in the Blue Saver plan, because this is a big deal that we can now spend this money on over-the-counter medications. When they first started HSAs, that was the case, and then they changed it. So now they're changing it back. It makes participation in the Blue Saver plan even more attractive. And I think we need to also use that in the marketing to our employees to let them know that that is something that they can really take advantage of with our HSA.
Trish, is there any way you can get that out to people?
When we met with Trish and John previous and reviewed the reporting, one of the things we talked about was getting information out educational wise with regard to Blue Saver, and we'll make that part of it.
Okay. Is that acceptable? Matt?
Yes, thank you. I don't know now. I can't keep track of my mute or not.
Know the feeling. All right. Next, we have old business. Is there any old business? If not, I'll move to new business. The first item we had there at the last board meeting, we have finally some people, including Butch Mouton, who's on the phone, and Pat Sonnier, who, by the way, is ill and worked very hard on this years ago. This committee has existed in various forms historically for many, many years. It was an Employee Benefits Committee, and Katie and Burnell, correct me if I'm wrong, but there apparently was some confusion about whether it was a board-approved committee or not, and thanks to Burnell making a phone call to Margaret Gilbo, who is a former secretary to the superintendent who knows where every set of minutes ever taken was located, we found those minutes and got them to Justin, and so the board approved at their last meeting the employee, I think it's Employee Retiree Insurance Committee, that Trish, I think, is going to put somewhere online with so people can access it if they should ever have any interest in doing that. But I want to thank everybody who was involved, especially Justin Santani, who did yeoman's work in getting that done while he was in quarantine. Committee bylaws, I asked to put that on the agenda. I know everybody's getting ready for school to start, and however that's going to happen. And busy, so I've asked Katie and Burnell if they would review our bylaws and make sure they are consistent with what the board passed Tuesday. There's at least one change because I think they added a committee member. Julia Reed with LPAE has already called me and made clear that she wants all the groups of teachers to still be represented that way. But if anybody has any suggestions, input, whatever, about bylaws, if you get them to Katie and Burnell, hopefully they'll have a draft for us to look at our next meeting. Trish is next up, and I was remiss. Congratulations to Trish on her new position, and to John Mouton, whom I haven't had the opportunity to meet yet, but I've heard a lot about on his new position. So, Trish, review of contracts and services?
Yes, ma'am. The only thing that we've added for this since last we spoke is the Regenix contract that Mr. Fontaine spoke of earlier. We've got it from 7/1/2020 to 6/30/21. And if you'll notice on that attachment that I sent across, it's got a little bit of a description with regard to Regenix in addition to the terms of the contract. But everything else is the same. Nothing else has changed.
Okay. Any questions for Trish? If not, it's that we need to schedule our next meeting. We need to meet at least once a quarter, which we have done, but that's what was in the document passed by the board. So, Mr. Fontaine, Your date is always the one we go by.
Well, I would think that, I would hope that we could meet in, the mid-September area. That way we can, talk about, pre-renewal and the cost, saving strategies that we want to incorporate there.
The only concern I have, Lynn, is we've gotten to where we end up meeting twice a quarter, which is really hard on some folks, especially the people who have to get sitters and that type of thing. Is there any way we can meet later without causing you a problem? Like October?
It doesn't cause me a problem, but it could cause you guys a problem with not being able to act on something in time. Could we do the latter part of September? Let's say the week of the 20th?
Okay, what's the Tuesday in the last week of September?
It's 22nd.
Okay, is that okay with everyone? September 22nd at 5:30?
That's the day before my 61st birthday.
We'll celebrate your birthday. You know,
Have cake. I'll bring the cake.
Okay, September 22nd, and we'll know by then whether it's going to be by Zoom, phone, or at the board meeting. But hopefully, Lynn, after September, we can get back into a sequence of meeting once a quarter. We did that once and we got off track, and now we've been meeting every 2 months. I mean, every other month, rather, it seems.
Right.
Okay. Any questions or comments from anybody? Thank you all so very much, and I will hopefully see everybody on September 22nd, and we'll adjourn the meeting. And Trish, I will send you the abscesses.
Okay, sounds good. Thank you.
Thank you.
I moved it with
Who's that?
Butch.
Butch. Thank you, Butch. Is there a second still on the line?
Hannah will second.
Great. Meeting's adjourned. Thank you all very much. Have a good one.
Thank you.
You can